Hello, everybody, and welcome back. Today with me there is Vipul Mehta. Vipul is the head of Asian investments at Nomura Asset Management. Welcome, Vipul.
Thank you, Thomas. Nice to be with you.
Vipul, today we want to discuss current trends in India stock markets. And so my first question is, India economy has been hit hard by the coronavirus pandemic. And through the nationwide lockdown, many people have lost their jobs. So how is the current situation in India, and how is the government countering the current crisis?
Not too different from what is happening around the world, I would say. So if you go back, to the month of March, India was probably the last hit in terms of countries to be hit by the coronavirus. It was also the first to go under a lockdown, and I have read several articles, measuring the extent of lockdown and the strictness of lockdown. So there's some index called the Oxford Index of lockdowns, which put the Indian situation at the strictest possible level. So it was at a level of 99 as compared to an average level of between 70 and 80 for the rest of the country. So, to that extent, in the initial stages, India did a very credible job of locking down the country. Obviously, India as an emerging country and not a very rich country cannot afford a lockdown forever. So it had to, or it was forced to start opening up, which it did in phases, and it is happening slowly and gradually. Even as we see number of cases still not plateauing out. So it's a tough one for the government, but all the same, it is not a catastrophe as I see it.
So governments and central banks around the world are reacting with printing new money, fresh money, and with fiscal stimulus to counter the situation. So how is the India government reacting on the current situation?
Sure. So, just in continuation of the first point that you raised, obviously there has been a big economic dent as far as India is concerned. There has been a significant amount of job losses and all that. Now, the government, first of all, was slow to respond with respect to the fiscal stimulus. But I think it was not an unfair situation. I think it is only fair for the government to get a feel of what is happening and how much needs to be done, and to get a fair handle on how bad the situation is before responding with the fiscal stimulus. I think the more important thing was the monetary measures which the Reserve Bank of India did. And I think the Reserve Bank at least went the whole hog in terms of keeping the economy going. So interest rate cuts, keeping liquidity available to the system, and all those type of things were in place. So there has been no issue in terms of the monetary measures. We could still see interest rate cuts even from here. The government did announce a lot of stimulus. It could be counted as about 10% of the GDP, but these were in different measures. But in a nutshell, I think what the government did was to ensure that the poor, the needy, the rural population get what is called as necessities. So, at least food and basic necessities. So money in the hands of the people. I will come to this concept of financial inclusion later, but it's been very helpful that financial inclusion has happened over the last 4-5 years in India, and therefore money into the bank accounts for people, mostly the rural and the poor people. And to that extent, things have been stable. So there has been no social disturbance or anything. In terms of business, support has been provided to the small and medium enterprises. And then, of course, there are various other measures which are on a case-to-case basis or a sector-to-sector basis, which are going on.
So let's talk about stock markets in India. Which industries and companies have performed well during the outbreak of the coronavirus?
So the one sector which has got hit the most is the banking and financial services sector, and it is quite understandable as well. One, this sector was a favorite before things started to go wrong. Second, the event is such that would cause a lot of non-performing assets, across all the types of borrowers, retail, corporate, everything, which is another reason that this sector got hit as well. On the other side of the spectrum, what has done well is one, obviously the pharmaceutical sector or the healthcare sector. Now, it's not a beneficiary that you would think of that. Companies are going to make vaccines or things like those, but just the narrative of healthcare doing well and GDP per capita, the healthcare percentage spend per capita in a country would go up. So that sector has done very well. The other sector which has done very well is the IT services sector in India. So these are the two very notable sectors which have done extremely well. The consumer sector has held on, especially the rural side of consumption, whereas the urban side of consumption has not been so good. So broadly speaking, that is how sectors have done in India.
So what impact did the coronavirus crisis have so far on the earnings situation of Indian companies and also on the valuation of Indian stocks?
It is needless to say that earnings for the current financial year have got decimated. The last quarter, which is the April, May, June quarter, was pretty much a washout quarter with 1.5 months of no activity whatsoever. So the June quarter results were obviously very bad in terms of growth rates. This year is obviously assumed to be a washout, and forecast now for the next fiscal year are talking of anywhere between say 25 to a 40% earnings growth. We can only put that number with some certainty as we get clarity with respect to economic activity.
Where do you currently find investment opportunities for your portfolio, and how did you adjust your stock portfolio since the beginning of the year?
We have reduced our financial sector holdings, with the view that there will be non-performing assets because of the situation. There will also be a humongous need for capital with all the financial sector entities in the country. Conversely, we have increased the sectors which have been doing well, and have recovered well, and which we think will continue to do well over the next, say, 3 or 4 quarters at least, which is the IT sector and the healthcare sector. And we continue with our reasonably optimistic stance on the consumption sector in India.
So you mentioned earlier that financial inclusion is a big topic in India. Is there a way to directly invest into this mega trend of financial inclusion?
Over the last 4 or 5 years, financial inclusion has been a big theme in India, to the extent that 99% of the household in India are now banked, or each of the households in India have a bank account to operate on. And we like the private sector banks. Even after all this turmoil, we are fans of the private sector financial companies. And one of the reasons we like this, besides the top-down financial inclusion, is because the public sector banks in India are very inefficient, are capital starved, and therefore they continuously cede market share to the private sector. So even in a bad scenario, the private sector financial companies are in a position to gain market share, and which is how we think investors can play these themes. So besides the banks, there are also other thematics like life and health insurance. Again, a very similar sort of thematic plays here also. These companies in the private sector continue to gain share. We are having new listings of asset management companies, which are also beneficiaries. We also have a few microfinance companies which reach out to the lower section of the society. So these are different ways in which financial inclusion in India can be played.
You mentioned the IT service sector in India before. So what especially do you like about the IT service sector? And are there any examples of portfolio holdings that you want to share with us?
Sure. So, most of these IT service companies, for example, are the very well-known names like Infosys and Tata Consultancy Services. Some of the mid-sized companies like Larsen and Toubro Infotech or Emphasis Limited, various names. So we own a portfolio of companies. So the good thing about these companies is they've continued to execute extremely well in this scenario. So all these concepts of work from home, remote working, offshoring, outsourcing have not got disrupted at all because of the scenario. Demand has continued, as this whole concept of cloud and work from home needed adaptation from global corporations. But most importantly, for IT companies and for a lot of other sectors as well, what has happened is cost cutting has also become a very big thing. And especially for the IT companies, this is more prevalent. So with businesses not falling, costs falling, these companies have been able to generate that extra bit of profit, and which is why these stocks have been doing very well in the marketplace.
So this was Vipul Mehta from Nomura Asset Management. Thank you very much, Vipul, for being here with us today and sharing your views.
Thank you, Thomas.